Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
Hello and welcome. Now, before I start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, New York coffee. We can easily see from the action over September and October that the high at 429.5 from February this year continues to cap the rises. On the downside, the lows in September ended up being just ahead of the key 50% Fibonacci line for the important November 24 to February 25 move at 335.15. And back then, it had the pierced but unbroken assistance of the medium moving average, currently at 351.30. A moving average that showed up again last Friday. Interesting, that one. In truth, apart from last Friday, we seem to have built a small base since late September of the very slowly rising gold long moving average, which is currently 358.80. All these earlier actions higher left us with a number of interesting situations. Thus, I drew 7 weeks ago the beginnings of an August to late September bullish Andrews pitchfork. But then in late October didn't fit, neither did a bearish mid-September to late October bearish Andrews pitchfork, such that I eventually finessed the bearish Andrews pitchfork into a dark blue bearish mid-September to late October shift pitchfork, which does fit, for now at least, and which you can see on my daily chart. In this, the market today is just above the slowly declining dark blue middle time, which is currently at 364.30, and underneath possibly the capping, though it doesn't look very good capping at the moment, maybe on a closing basis, capping green short medium moving average. It's currently at 374.80. There's something else I'd like once again to look at here. For this, I'm indebted to Ray Bradbury for asking me about New York coffee 34 weeks ago, and I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025 when I earlier reviewed the longer term charts. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom, for bright red neckline on my chart, my monthly chart, currently at 276.65. This break higher over this neckline reached its primary target on the upside, but there was a secondary much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line here at 433.75, and that's quite close in the grand scheme of things. Prices did indeed turn lower up at this key combination of the 100% projected Fibonacci line and the target of 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20 and below the high of May 2011 at 308.90. However, in July and again in August, the market started to form a base on top of the bright red neckline. August and its monthly key reversal up raced all the way upwards, and we saw an extension to that move up in early September, but not reaching quite as high as we saw back in February, before dropping lower and setting up September as a monthly bearish harami. However, since then, we have not carried on lower, at least not in October, as there we've ended up with a combined bullish piercing line pattern and bullish double after September's bearish harami. And right now, November is looking, sitting as we do at the tail end of it, it's looking, and with a shortened week still set till the end of the month still, it looks like a combination either of an indecisive doji cross or an indecisive spinning top. Now this goes somewhat to explain the strange contradictory indecision we also saw on the daily charts last week. Now we have congestion just below between 371.25 and 375.75, or roughly where we are now. I also a quite steep, especially for a bullish shift pitchfork, action for the October 23 to August 25 move. Here we are underneath the middle time, currently at 389.05. Now I don't favor this pattern much, but it is nevertheless still there. Meanwhile, on the downside, the real key will be the bright red neckline below. However, the old 50% projected Fibonacci line at 347.20 looks interesting. I should point out one more final feature on this longer term chart. The possibility it may form a very large bullish halfway hesitation or a possible bearish double top, with all the contrary implication both these patterns may have. I will not discuss this last point any further, as it is way too early to isolate which will be which. But in all this, I ask you, please remember these here on this monthly chart are longer term, in some cases very long term patterns. London coffee. 28 weeks ago I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49, sitting above," end of quote. This overhang of bearish pressure and ammunition is important, as it started back then to press down, heightening the breaks lower. The rise since early August pushed up through some significant resistances, now turned into supports, and more so, these are some keen at the time and relatively close to the market supports. Notably, the trio of interesting 50% Fibonacci lines for November 21 to February 25 move at 38.08, the May 21 to February 25 move at 36.49, the March 20 to February 25 move at 34.81. Then there's the congestion of the 61.8% Fibonacci lines at 41.68, 41.87 and 42.90, and the interesting 50% Fibonacci line of February to July 2025 move at 45.05, which now again features as resistance. Thus, most of these are now back to being supports, as is especially the very slowly rising mauve medium moving average, which is currently at 41.71. Now, if we look higher, we have some former supports that are now once again resistances, notably the gradually dipping gold long moving average, currently at 45.56, which eroded a lot of the bullish incentive back in late August, mid-September, late October, and especially early to mid-November, and also last week. These past 2 weeks, we have seen concerted attempts lower. Last week, not as much as the week before, which is indicative of some bullish issues and pressures, but for all of these moves lower, one has to give credit to the most important of all the resistances, which was and still is the capping dark blue February to date downtrend, currently at 45.86. This has caused lower highs even when it has been penetrated, as we have seen in October. Thus, I cannot overstate the importance of this downtrend. At the same time, I should also mention something else in its time was interesting and proved to be crucial, and that was the lesser Fibonacci line at 48.22. Now, this capped the rise in early November, as it did in late October, in September, and I suppose also in August. All these capping actions initially prompted me to draw a July to late September bullish shift pitch hook, which failed 2 weeks ago, and led me eventually last week to draw a very shallow bright red late August to late October bearish shift pitch hook. The market today is in between the overhead bright red upper time, currently at 47.66, and the bright red middle time below, and it's currently at 43.16, and as I say, it's quite shallow. I actually don't like this bright red pitchfork, but it does encompass the recent market structures, so therefore it does have value.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.